This week was absolute madness once again. Iran opens up Hormuz, oil crashes 10%, and less than 24 hours later, it's closed again. Everything back to where it was. On top of that, Lufthansa Cityline is gone for good, and the S&P 500 breaks the 7,000 mark for the first time since January. British American Tobacco raises its dividend, and the BDC sector is performing like a Swiss watch. Welcome back to the weekly review for this calendar week 16. I'm Marco, and today we're going through all the news from the past week. Quick overview. Brent is currently at $96 after the back and forth over Hormuz. The Fear and Greed Index closed from 15 up to 68. That's from extreme fear to greed, all within 2 weeks. S&P 500 above 7,000, currently an all-time high, and gold at 4,830, fourth consecutive week of gains here. The DAX is at 24,170 points, that's up 2.3%. 10-year US Treasuries are currently stable at 4.31%. Now let's move on to the Hormuz roller coaster and the big topic at hand. Thursday, Iran says Hormuz is completely open. All merchant ships are allowed to pass through. Brent crashed from $99 to $88. WTI dropped from 94 to 81. Oil stocks down. Everyone is happy at this point. Then on Friday, plot twist, the IRGC reverses everything. The reason? The US blockade of Iranian ports continues. And it gets worse. Shots fired at Indian merchant ships in the Strait. India summons the Iranian ambassador. Brent back up to $96, WTI over 90. Goldman Sachs says if Hormuz stays closed for another month, we'll see Brent at over $100 for the entire year 2026. And that would, of course, be poison for inflation. But for us as energy investors and also as hard asset investors, it would actually be good at first. The circumstances, we don't even need to talk about it. Our positions in TotalEnergies, Chevron, BP, or Equinor, or even AKBP are all directly benefiting from this environment right now. Now let's move on to the entire energy sector. TotalEnergies halts production in Iraq. The United Arab Emirates and Qatar, it sounds bad, but they're still expecting a profit boost because prices are currently so high. In addition, there's a new oil discovery in Congo. Right now, everything is very bullish. Chevron is increasing imports from Venezuela to lower US gasoline prices. The Supreme Court has referred the coastal lawsuits to the federal court. And the dividend? According to analysts, it's the safest in the sector because of the integrated business model. BP expects exceptional trading profits. The trading division is cashing in on the volatility. Equinor is gaining momentum. Phillips 66 is benefiting from rising crack spreads. OMV in Austria has reduced the diesel discount in the price cap to 2.8 cents. The SPU now wants to involve ÖBAG. There is political risk, but operations are continuing here. Let's move on to shipping and here to DHT. DHT Holdings reports Q1 rates of $78,800 per day for their VLCC fleet. And that's really massive for tankers. And with their 100% payout policy, that means whatever comes in is also paid out. There's no doubt about that, but stay cautious and continue to avoid the Houthi route. Smart decision. Given everything that's currently going on, we inevitably come to the topic of dividends. News what interests us most is the good news here. British American Tobacco increased its dividend at £2.45 per share. These are just 2.1% compared to the previous year. The 5-year growth rate here is 3.1% per annum, here at 5.7%. And being defensive is the anchor here. That's exactly why we also have a defensive stock in our portfolio for weeks just like this one. Main Street Capital preliminary first quarter figures are out. NAV has risen slightly to between $33.42 and $33.50 per share. The BDC sector is simply continuing to deliver at the moment. Ares Capital offers a 10.2% dividend yield with a $29.5 billion portfolio. Low credit exposure, BDCs are currently the calm anchor in the storm. Let's move on to the automotive sector. Stellantis, the winner of the week. First quarter sales up 12% to 1.4 million vehicles. North America even up 17%. Ram 1500 and the new Cherokee are driving growth. A new US sales executive has been brought in from Hyundai. But caution is advised here, a 22 billion euro write-down due to a strategic shift in electric vehicles. And right now, these are mixed signals. Mercedes is defending itself at the annual general meeting. There is criticism of the €3.50 dividend and the China strategy. However, free cash flow was positive. The new EQS comes with 575 miles WLTP and 800-volt charging. Let's first take a look at what's happening here and then at the future. BMW is weakening. Sales down 3.5% in quarter one. Barclays rates it as underweight with a target price. At €82.50, VW delivers 4% less, but is temporarily number one again in China. Plug-in hybrids are gaining, diesel is third. The process is currently underway here in Braunschweig. Personally, I have increased my holdings of VW shares, but why is the extra payment coming soon, and why will the dividend also be paid out in May? And that's why I said I looked at the dividend and thought to myself, okay, at the entry point where the stock is currently trading, I'd like to take the dividend as well. And I'll just see how it goes. How things will develop in the future with VW, BMW, or Mercedes is basically the same in the end. But as I said, I'll just wait. I have an investment horizon of 10 years or more anyway. So I can sit something like this out, and I'm just curious to see what happens over the next 1 to 2 years. How things develop here further. Right now, there are rather negative signals, to be honest. But that's why I'm aware of the risk, but I also got in at a correspondingly lower price. Lufthansa, end of an era, and this was actually the toughest strike week in Lufthansa's recent history. Monday and Tuesday, pilot strike. Wednesday and Thursday, cabin crew. Thursday and Friday, pilots again. Hundreds of flights have been cancelled, and then on Friday, Cityline shuts down operations for good. 27 aircraft, 800 cabin crew, done. Outsourcing instead of giving in, that's the approach. In March, at the 100-year anniversary, they said, flying less is not an option for Germany, but now that's being crossed out. Orient cruises until 2027 are affected because of the Iran conflict. The entire aviation sector is under double pressure. Strikes plus kerosene, costs for dividends. Right now, Lufthansa is a difficult topic for investors. I'm still invested and will remain invested, but I have to say very clearly, just as a quick note up front, I find it especially difficult when a large company like Lufthansa is now simply struggling. Due to high kerosene prices and everything that comes with it, and then also with the Iran conflict where they basically have to fly around everything completely, and as a result, important points are simply lost, which shows that costs are rising even more. And then the union comes along and says, yes, let's strike, as if Lufthansa doesn't already have kerosene problems at the moment because costs are rising so extremely. No, they just throw in 3 more strikes. Honestly, I find that somewhat concerning or simply not ideal on the part of the union, because a company that's already suffering and first has to see how it can possibly develop further due to the whole kerosene situation, and also because of all the areas they have to avoid, simply has to fly more miles, more tons. The question arises here, do you really have to pile on even more? I don't know if that's really sensible on the union's part. In my opinion, the long-term consequences will be clear. We're also curious to see what happens here. Personally, in my opinion, it's a bit questionable to try to exert such extreme pressure again. But of course, that's just my take on it. You can let me know what you think about all this, but personally, that's my stance. I'm not really a fan of doing something like this, especially when companies are already struggling a bit at the moment. Now let's move on to Novo Nordisk, and Novo Nordisk is entering into a partnership with OpenAI. The goal, AI. Protected drug research, faster drug discovery, and costs are supposed to go down as a result. The Vekov pill has been on the market since January. Interesting, but still not a reason to buy. The stock remains under price pressure from Eli Lilly. PayPal. Michael Burry is building a 3.5% position. Quarter 4 was bad, leadership change, but the valuation is attractive. A classic value play for the patient, and that's true. PayPal is simply down right now, plus the dividend numbers are really very low and very small. But at the current price target, or rather the current price, one might consider taking a small position. Of course, this is not investment advice or recommendation, but they really are at rock bottom. You just have to say PayPal is already well integrated everywhere. I don't know if you can just easily get rid of it somewhere again from the market. You really have to be honest about that. Dow has a new CEO, Karen Carter, up 41% in 1 year. Polyethylene prices are rising due to supply disruptions. That was a little preview of what has ultimately happened. I would say let's quickly go through everything again so we can see what was going on here. Let's take a quick look at the macro screener. We now have an inflation rate of 3.29%, a key interest rate at 3.64%, and a yield curve 6 of 0.55%. That is between the 10-year and minus the 2-year treasuries. Then we have a money supply of 4.88. The money supply is growing moderately, which means liquidity is increasing again. We have an unemployment rate of 4.3% and a morality index of 17.48% at the moment. So currently the market is somewhat calm. Let's see how things develop tomorrow, on Monday, when everything is happening back and forth. Also with Hormuz, ultimately with the Strait of Hormuz. So we're just curious to see what will ultimately happen there. On the 4th, and Creed, as we already said, at 8, but currently that could probably change on Monday, so maybe tomorrow. Maybe it will be exactly the opposite, but let's see how it opens tomorrow. Yes, the 10-year candidate is currently at 4.26% risk, and conversely, they prefer it. They are going for liquidity, moderation is low, the trend is upward, energy, shipping, opinion. We've already discussed all the advantages, everything is moderate and normal. Shipping is also quite clear. We've already talked about it as well. At the moment, it's clearly the winner. And for rates, dividend continuity is currently more important than price gains in this environment so far. I know, yes, as we've always said, also at the 52-week low, in some cases for many. I'm still a bit torn about it, honestly, because we're just seeing a lot of things that inflation might come back. Then maybe interest rates will be held or could even be kept at the current level. Yes, it's also possible if everything really stays up there like this. Maybe then there will be talk again that interest rates might be raised again. And that would, of course, be really negative for the rates. But maybe everything has already been priced in. I need to look into that more closely. And that will be covered in the next series anyway. I think I still have 4 upstream stocks that I want to introduce to you. And then I'll move on to REITs, because that's simply the market that has suffered the most recently. Of course, just like with pharma, maybe I'll alternate. So one time REITs, one time the pharmaceutical industry. You can just let me know briefly how you would prefer it. Should I just go through one block at a time, or should I really alternate to bring in a bit more variety? Just let me know. Or if there's anything else you'd like to see here in the weekly review. If I forget something now or don't explain or inform you thoroughly enough, please let me know as well. And just leave a comment below. Yes, Marco, please do this or that. One more quick thing before I forget. I was at the investment fair in Stuttgart this Friday, in case anyone saw me. So you can definitely feel free to approach me. Just keep one thing in mind. The thing is, when it's so loud, I have a bit of trouble hearing. So maybe just tap me briefly or say, hey, Marco, let's have a quick chat. It's really no problem at all. Just if you walk by or something like that. And I might simply not notice you, because when there are so many background noises, yeah, I really struggle to pick out anything good in that situation. What is being said, just so there aren't any misunderstandings, and people say, yeah, he didn't even want to talk to me, or something like that. That's definitely something I want to avoid. I'm always happy to have a clear exchange at any time. Maybe just a quick word about the West Fairs. So I really did say, well, it really is a great view overall, or just a great experience. It was my first West Fair. And I have to say, it was very much focused on raw materials. So it was really quite extreme, everything that happened there. I even got to talk to CEOs and all the mining companies, those who are just now opening their mines or even moving into production. Those were really great conversations, just realizing and talking to them about everything they have to pay attention to. It was truly an interesting story. Maybe I'll make a separate video about it. If you're interested, you can just let me know briefly. Exactly. Otherwise, BDCs, currently interest rates are still high. As long as interest rates remain high, the margins here are naturally a bit wider. but you have to watch out for how the defaults will ultimately turn out because many might not be able to pay anymore. We'll have to take another look at that in a separate video. My videos on BDCs are already a bit older, and I really only have a very small position. We'll also have to see if I'll briefly discuss that here as well then. Exactly, otherwise tobacco, the defensive sector, as we already mentioned, British American Tobacco, is increasing its dividend, and Philip Morris is also really on a very good path, practically at a 52-week high. And that also confirms the thesis, simply including the defensive sector as well, because they really do perform well in such phases. Yeah, otherwise I just noticed that the camera has turned off. Sorry about that. Let me check. Maybe the battery is empty. I still need to get used to how I'll handle all of this in the future. It could be that I then maybe need to order a dummy battery because the battery really runs out quickly. But I mean, that's not a big deal because the information is still there, even if I'm not visible for a moment. Exactly. Otherwise, with the earnings calendar, which is what really matters in the end, let's quickly go through it again. Maybe here we still have some earnings. For example, we have Canopy Growth on May 29th, Flex LNG on May 29th, Frontliner on May 29th, BWLPG on June 2nd. So we can already see a bit of what's being paid out here or what might still come in. Otherwise, I'd say let's take a quick look at the sectors. Energy is definitely seeing clear inflows. Real estate as well, actually. Technology, commodities, utilities, industry, basic consumer goods are down. Cyclical consumer goods are down. Finance is out, and healthcare as well. Yes. And you just count that as a rotation signal. Where is the market rotating right now? A bit into technology. Cyclical consumer goods are seeing a bit of inflow because they're also at the bottom right now. Clearly, finance, commodities, and basic consumer goods are moving out. Healthcare, yes, I would say, is also moving out, while real estate is moving in, industry and utilities are moving out, and energy as well. But that's obvious. I mean, with 15% in 3 months, you should also be realizing some profits, right? Everyone should definitely be aware of that. Yes, otherwise, here's a quick summary again. All right, let's take another quick look at the market cycles, maybe just briefly. So shipping is still extremely cheap. Currently, we have, so to speak, 42 months, an upward trend. You can already hear that. Shipping cycles, and everything is elevated anyway. That should be clear to everyone, I think. Silver is now at $73.63, copper at 37, gold at 445, so that's according to the ETF in the end. And yes, we just need to keep collecting there. Yes, exactly, right? As I said, this is my little dashboard that I'm currently experimenting with a bit and building a bit, yes, because I just didn't feel like always having to do so much myself. I always say trying to find all the information and basically having to open 4 different websites. And that's why I put everything together on one dashboard just the way I need it. I want to quickly share something with you. Specifically, I just want to take a quick look at PayPal with you to see how it's currently doing, what it currently looks like. Price at $50, dividends at 0.55%. The daily range, regardless, over 50 weeks is between $38.46 and $79.50. Exactly, there was already a larger sell block here, and here it was bought again. Now we can also see that we currently have to be above the 50-day SMA here. And let's take a quick look at the full historical data. So you can already see that it really came down from above here. And in my opinion, it currently already has a very low value here. And you can also see that there are some buys here and here as well. Sales were pushed down again. We also had a gap here. You can see it very clearly. And normally that always gets filled. That means we'll probably go up a bit more and then we'll have to see how things develop. Will we maybe break through this here and then start moving up again a bit? Well, let's take another quick look at the flip here. This was really a good buying zone. As I said, at 38 euros 46, or rather $38, let's just take a quick look at how things generally look here compared to the EPS. At $5, about $5, that's around 35% compared to the previous year, and then free cash flow at 5.6 billion. FCF payout, that's at 2.3, return on equity at 5.8, which is very good. What else do we have? So the DCF valuation, I actually built that myself. Currently, With the DCF, we'd be at a fair value of $106. Yes, we'll just have to wait and see how things develop. But it's definitely an exciting company, that's for sure. And the growth was just paid out, as I mentioned. So there's nothing new in that regard. What I actually wanted to look at, here we can see the flicker. The dividend has already been paid, as well as revenue and net income. We usually see it like this. A bit of a slight increase, because what I actually wanted to see is exactly when the dividend was paid. Actually, I wanted something else. So analysts are setting their price target at $53. And so I really want to see if there was anything else going on. Here, 13 and 11, which were either bought or sold. Currently, they're selling. Institutions, as you can see here, none have bought recently. And currently, Vanguard, JP Morgan, State Street, Fidelity, Morgan Stanley, and Goldman hold at 6 levels. Accordingly, the shares. Yes, currently, according to a Kai assessment, of course, this is not investment advice, obviously, he says to buy more, and the dividend safety score is 100%. Yes, of course, they just paid out the dividend, and it's also a really very conservative dividend. But it's really very interesting to see how things might continue with PayPal, because they just keep getting such negative headlines all the time. And as I already said, in my opinion, this is really a very large company, simply by now. And I think it's not so easy to get rid of it anymore. Now that they're also introducing a dividend, that's also interesting. And yes, there have also been, from time to time, yes, let's say takeover attempts or acquisition inquiries, which have mostly always been rejected. But in the end, that can always give things a bit of a boost. But PayPal has actually already said they don't want to be acquired. But let's see how that develops in the future. So, as I said, sorry again that you can't see me right now, but that would basically be it for my weekly review. I think we've already discussed everything now. So, what is the outlook in the end? Hormuz remains the driving factor. As long as the strait opens and closes, oil will stay between $85 and $100. Our energy positions are, of course, currently well positioned here. British American Tobacco, dividend increased, up 3.1%, a defensive anchor with a 5.7% yield. Then the automotive sector is split here. Stellantis, I would say, is top or recovering somewhat. BMW and VW are currently flopping, and that's why you simply have to remain selective and closely monitor how things develop here. S&P 500 over 7,000, the rally is real, but a hormonal setback can come at any time, so obviously don't buy here out of FOMO. You usually don't buy at the top anyway. Then next week. CEW sentiment on Tuesday, retail sales from the US. And at the end of the week, the FOMC meeting begins. And that's going to be exciting as well. And as I said, if you enjoyed the video, please give me a thumbs up and feel free to subscribe as well. See you soon. Definitely next week, or actually already on Monday or Tuesday when things continue. With another upstream stock, as I said, there are about 4 left. Horizon Oil, Cardinal Energy, for example. Yeah, there are still a few smaller stocks, but otherwise I'm really almost done. I'm just trying to get through this quickly now. But I know I wasn't really, well, let's just say that. But yeah, that's just how it is. Sometimes you just can't push through everything all the way. Sometimes you just need a bit of peace, or there are other reasons as well. Yeah, there's still something coming up, but that would pretty much be it at a glance for now. And as always, this is not investment advice. I wish you all successful investing. One more thing, just quickly beforehand. Tomorrow, a flash sale from Investing Pro is starting. There will probably be about a 55% discount again, plus 15% through my community bonus. But of course, I'll update you all again about this tomorrow. So it starts on Monday then. Otherwise, as always, this is not investment advice. See you in the next video. Until then, goodbye.